warahmatullahi wabarakatuh. Thank you for coming. May Allah subhanahu wa ta'ala reward you. By just coming, this means something good about you. This means that you're interested in financing a property and you want to do it in an Islamic way. And since we live in a non-Muslim country, it is sometimes very challenging to find something that is Islamic. And people come up with a lot of questions. Is it really Islamic? What does it mean to be Islamic? You know, what is the difference between the Islamic financing options and the conventional banking options, right? So today, alhamdulillah, we're having Brother Zeeshan Qadri from Guidance Residential, and he is going to help us answer the questions that you guys are having after giving the presentation. And I remember last year in October 2024 when I was attending the Imams Conference in Houston, Texas, and I met some brothers from Guidance. Maybe I'm sorry that I don't remember the names, but I did meet them there. They were doing a presentation about the Islamic financing options, and we had a great talk, alhamdulillah rabbil alameen. And for Imams Conference, for you to understand what that is, Imams from across the country, they get together once a year to talk about the issues pertaining to their masjids and Islamic centers, and what fatwas they get, and every year we have a theme that we try to revolve around. And for the Muslim fuqaha, the Muslim jurists and imams to welcome people from Guidance Residential, that means alhamdulillah that they're trying to do their best to abide by the Islamic laws and regulations when it comes to giving loans. So today we're all here to listen to Brother Zeeshan, inshallah, and then after that I'm sure that everyone has questions, and he's the man to answer, not me today. However, if you want me to answer after him or to add something, I'll be more than willing to do so, inshallah. Okay, and now I'll pass you the microphone.
Thank you so much. Assalamu alaikum, everyone. Thank you for joining us today. Like I mentioned, my name is Zeeshan Qadri. I'm the regional manager with Guidance Residential. We are the #1 provider of Islamic home financing in the US. I've been with Guidance for approximately a little over 7 years now. I started as a sales individual. Now I have a team of account executives, and I cover New Jersey, Pennsylvania, Delaware. And as an organization, I'll talk about obviously in our presentation that we cover 34 states in the US. Wherever there is a sizable Muslim population, we're licensed in those states. So alhamdulillah, if you or your family members are looking for Islamic financing in any of those states, we'll be happy to assist as well, inshallah. How many of you have heard of Guidance Residential before? You have? Okay, wonderful. So we have maybe 10% who've heard of Guidance at least. Can I ask any feedback? Positive, negative, what have you heard about Guidance? Or even in general about Islamic financing? What is your perception? What is your thoughts on Islamic financing? Or what do you know so far? Please.
I've heard that it's more expensive than getting the regular.
Okay.
And
More.
also it's kind of a labeling at the back end process not done by the regular banks.
I don't know if you've heard I always hear this, kaan idhar se pakdo in Urdu, it's like kaan idhar se pakdo, it's the same thing, it's just a label is being different, right?
So they're saying that all your statement processing is done by the Chase or Bank of America.
Okay. So that the back end is interest based, and the front end has a label of Islamic. Sure. So what I want to do in this presentation is I'll go over Islamic financing, what that means, about the company, about the process, and how Islamic financing is different. And secondly, the impact of not having an Islamic financing option in the traditional sense, what that does to a society. So we'll talk theoretical, we'll talk practical, and I want you to have an open mind and have direct questions This is the opportunity for you to ask those questions about, and I'll answer these questions as we go along. Towards the end, we'll do a question and answer session to kind of go in depth into those concepts. Okay? So the first and very important factor is that Guidance Residential is not a bank. And this is a very important aspect to understand, that a bank's job is to lend money and make money. That is, by law, what the bank does. It's their bread and butter. They lend, borrowing and lending is their main primary source of business. You obviously have investment companies out there, but banking is specifically made based on lending and borrowing transactions. So Guidance Residential, we are not a bank, and I'll talk about who we are and how we transact, because that matters from Islamic compliance perspective. So who we are a company that is developing Islamic financial programs for Muslims in the US and beyond. We have multiple different companies within our umbrella. Our parent company's name is Capital Guidance. Capital Guidance is a conglomerate from the Middle East. That's where our parent company is. That's where our initial funding comes from. And that's how we started this organization. A little bit more about the parent company, Capital Guidance, is the first company to provide Islamic sukuk in Asia and in Africa. So it's launched Islamic sukuk products in Asia and Africa. That's how we started the investment options. In addition, the parent company, Capital Guidance, owns real estate projects around the world, including, if you've been to the Middle East, they own the Shaza Hotel brand. In Makkah and Medina, right outside Haram, there's a hotel, Shaza Hotel. They're the parent company that owns this hotel as well. And they also were behind the launch of Islamic financing in Saudi Arabia. It's called Darul Tamliq, and you can look them up online, where they provide a Sharia-compliant way for home financing in Saudi Arabia. Similarly, our Sharia board who's been with our program since inception, has been at the pioneer and forefront of Islamic financing, including in Malaysia, in Pakistan, and recently starting to launch some products in Morocco. So that's the Sharia board that's launched these. Bismillah. Good? Okay. So Guidance Financial Group, we were created as a response to the needs of the Muslim American community to allow them to create a product that meets the Islamic financing aspect while also meeting the law of the land, the requirements, the legalities that are required in the US without compromising the Islamic compliance aspects of the product. That is the key business model, right? So today we're in over 34 states. We've done over $10 billion in Islamic financing. Should I stand on this side? Is it easier? We've done over $10 billion in Islamic home financing, launched in 2002. Helped over 45,000 families now to provide Islamic financing across the US. And we're basically, as you can see from the map, we're in all the major US states, wherever there is a sizable Muslim population. And inshallah, as the Muslim footprint grows in the US, so will we. So we currently have offices in all the major states. We have in New Jersey, New York, Florida, Texas, California. Virginia is our headquarters. But as we grow, we are obviously looking to expand. And by the way, I have some flyers on the boards as well. We are looking to hire as well, including in this community, inshallah. So how did this program come into existence in the US? So the program started, it took us 3 years, from 1999 to 2002, a multi-million-dollar research and development project involving 18 law firms from across the US, including the Sharia, the world-leading scholars in Islamic finance. And I'll talk about those in a moment as well. The goal and the mission, like I mentioned, was simple. For 3 years, they spent time developing this program. Okay.
I'll change the batteries and bring it.
Okay, thank you. So they spent 3 years with 18 law firms, our Sharia board, to create a program that meets the Islamic compliance of the product while meeting the legalities of each federal government's regulations, including state regulations, because each state has different regulations for banking. So we went through that process, went through a rigorous process doing this, and alhamdulillah we were able to launch in 2002. We launched initially in Virginia and a few other states locally. And after we launched, alhamdulillah, we started expanding, and as the needs of the Muslim community grows, we will continue to expand in other states as well. The program itself is called a declining balance co-ownership model. Okay? And it's a co-ownership development between us as a part owner along with you in the property. That is the key component, that it is not a lending and borrowing based contract. Instead, it's a partnership-based contract that meets the Islamic compliance of a product. So, very important to understand from a Islamic aspect is, what is riba? What is the concept of riba, and what does Allah subhanahu wa ta'ala state about it? Right? So Allah subhanahu wa ta'ala states in Surah Al-Baqarah, those who take unlawful interest will stand before Allah subhanahu wa ta'ala on the day of judgment as those whose minds have been corrupted by the influence of shaitan. They say that commerce is just like interest. But Allah subhanahu wa ta'ala has made commerce lawful and has forbidden interest. This is at the crux of Islamic financing. Obviously, it's one aspect is Allah subhanahu wa ta'ala has stated that riba, interest-based transactions, are unlawful. And commerce-based transactions, business transactions, those are considered lawful by Allah subhanahu wa ta'ala. That is the key difference. And so, similarly how it says here that they say that commerce is just like interest. So even during the time of the Prophet ﷺ, people would question, what is the difference? So we still have those questions as well. But we have to understand commerce versus interest, what is that difference? So we'll explore that inshallah. So riba, what is riba? Riba is profit made out by collecting additional on a loan. If an individual gives someone $100 and says, give me back $120, that's riba. What's very important to understand on the riba-based transaction is two things happen. One is the profit aspect, right? You give someone $100 and you say, give me back $120. The profit aspect on money. I'm giving you a financial instrument, money, and I'm expecting more money in return. That's happening in this. Number two, as a lender, I am guaranteeing my principal. So if I give you $100, I'm expecting you to give me that money back no matter what. I am not taking on any risk. You cannot come back to me and say, oh, I lost the money, I invested in my business, etc., something happened. I'll say, no, I lent you this money, give me back my money. So a lending and borrowing transaction, what happens is the individual who has money makes more money and guarantees its principal in both aspects, and the risk is passed on to who? The borrower. He is on the hook no matter what. That is what happens in a riba-based transaction. So the rich keep getting richer, and we'll talk about the concept of what impact it has had in the current financial system and around the world. So why does Islamic financing matter today more than ever? And today we'll talk about some of the examples of what impact a riba-based transaction or a financial system has on society around us today. So if you look around the world today, rising inequality, rising debt, rising poverty, rising unemployment. These are built into the system, a financial system that we have existing today in the US. 8 men are richer than the poorest half of the world population. 10% of the world's richest 10% of the population holds 86% of the world's wealth. And the top 1% own 46% of the world's global assets. That's not how it's supposed to be. And why does that happen? Because again, a riba-based transaction or a financial system is backing this transaction, right? Where the individual is able to lend and borrow, lend money out that they have built through generational wealth or whatever means they have. And over time, they never are taking on any risk. They're not creating a product. They're creating no risk in the transactions, and they're guaranteeing their principal and their profit. Rising debt. 30,000 children live under the age of 5, die every day due to debt. Rising poverty, including in the US. 37 million people in the US live in poverty. Because, again, the system keeps building the system is already stacked in such a way that the rich will continue to get richer over time, and the poor will continue to, see the impact of it. And that's based on the financial system. Global unemployment around the world, 210 million people are unemployed around the world. Again, based on a financial system that is creating this, this inequality in the system. So why does such rising inequality, debt, poverty, and unemployment take place? And the root causes are the monetary system, the fractional reserve banking method, and the value-neutral economic philosophies. These are concepts that the current financial system has. So what we're doing right now, just for brothers who have joined, we're going through and understanding what is the difference between Islamic financing and the traditional interest-based financing that exists in the world, and why Islamic financing is so important in all aspects. And alhamdulillah, there's barakah in our religion, not just in finance or in one aspect, in all aspects of our religion. So there is barakah even in Islamic financing. So when you have a system that is non-Islamic, you have these issues where you have rising inequality, debt, financially, people who are rich keep getting richer, right? So those are the challenges that you see. And why do you have this? The rich are able to lobby, create speculation in the market, and continue to benefit from all of those financial systems that we have in place. Most of the money in our economy is created by banks in the form of bank deposits that appear in your account. 97% of the money in the economy today is created by banks, while 3% is created by the government in printing. Right? So people think that inflation is one of the key factors. It's not just that, it's also fractional reserve, which we'll talk about. How banks are able to create money out of thin air on a daily basis. And that's what their system is built on. So this is a very important slide, fractional reserve banking system. This is why one of the very important aspects to understand why we are not a bank, one of the components of it. For example, you deposit your paycheck into the bank account, $2,000. The bank is able to lend out 90% of that money to others. By law, they're allowed to do so. That individual who borrows that 90%, he goes to his bank and deposits that money. And when he does so, his bank again lends out 90% of the money that he deposited, of the borrowed money. So this is a system that creates money out of thin air over and over and over again. And what that has led to today is, in addition to that, value-neutral economic philosophy. That is what you have today in the world. What does that mean? That means any bank or any individual looks at any product that will make them money, no matter if it will help the society, is it harmful to society, they don't care. Will it make money? That's the main objective. And that is the concept of a interest-based financing model. This was a really important slide. 63 trillion value of all goods and services produced in the world today. However, 955 trillion amount of financial currency that exists in the world. So think of it as gold bars, right? 63 trillion, 63 gold bars. How can there be 955 trillion debt when all the products and services that exist in the whole world are 63 trillion? 15 times more. There's not enough gold bars to pay off all the debt in the world. The whole system is based on lending and borrowing constantly over and over and over again. I don't even know what the number is today in the US, the debt number. It just keeps growing and they keep expanding it because we live in a society where it's completely built on debt.
Is that number per year?
No, overall.
As of today. So US is about $38 trillion.
I thought it was even higher. 30 trillion in debt.
38, yeah.
So anyways, solution, Islamic finance. Sinn Féin, this is a saying we ourselves. This is created by the Irish in their revolution against the Great Britain. It's basically we ourselves. If Muslims are going to create a product or a solution for all of humanity, we have to be the ones who are at the forefront. We cannot rely on riba-based banks to create an Islamic non-riba-based transaction for us or a model for us. We Muslims have to be the ones who create this. So how is Islamic financing different? Number one, it's rooted in divine law. Islamic financing is obviously based on the rulings of Allah subhanahu wa ta'ala, what Allah subhanahu wa ta'ala states in the Quran, which we talked about in just a moment. Second is economic justice, meaning Islamic financing does not allow you to lend and borrow and make money on interest, number one. If you are leading in any commerce-based transaction, it allows you to make a profit, but you have to take on risk. You have to have skin in the game. You cannot guarantee your principal. You have to take on risk. That aspect is very important. Circulation of wealth, because risk is shared between multiple individuals, investors, the homeowner alike. Commoditization, there is a specific product in the middle of this transaction. When you go and borrow from the bank, even though you're borrowing to buy a house, you, the individual himself, are liable for that transaction. Yes, the house is a commodity, but let's say there's a loss on the product. Let's say there's a loss from that particular home. The bank comes after you personally as the individual because you borrowed that money. Islamic financing states you have to have a commodity in the middle and invest, just like any investment, our share, our partnership, our profit, our loss is dependent only on this property alone. We cannot come after you personally to recover any losses. And then obviously risk sharing that I mentioned.
So can you a little bit elaborate on the risk sharing?
So with the homeowner, we obviously make a profit, but we also share risk with the homeowner in case of foreclosure, natural disaster, and imminent domain. These are scenarios where the homeowner does not have a say in the sale of the product. So I'll go deeper in depth in examples as we go along.
Okay.
But
What if I'm moving and I want to sell a house, but it's too much?
So I'll talk about those examples, inshallah, in detail. So again, just to give you a quick idea, Islamic financing is based on an investment, a commerce-based transaction. You are partnering with guidance to buy the house together. We're not lending or borrowing transaction. It's not happening. We're sharing in the profit, but we're also taking on risk in the transaction. That is the key component. And Guidance, by the way, is the only company in the US that is Muslim-owned, Muslim-operated, and is not a bank. That is the key component. So our program, what is the program called? It's called the Declining Balance Co-Ownership, in Islamically called the Musharaka Partnership Program. Okay? And within partnership Musharaka programs, there are different types of partnerships based on a joint ownership, joint enterprise. So our program is a joint ownership model. We have ownership in the real estate property with you as a transaction. Yes, sorry. So how? Oh, sorry. So how does this look different from a practical perspective, right? When you go to a bank versus if you were to work with Guidance on purchasing a home. So when you partner with Guidance, you are signing a contract, which is a co-ownership contract, okay? When you go with the bank, you are actually lending, you're signing a lending and borrowing contract called a promissory note. So you're borrowing money from the bank. With Guidance, you're doing a co-ownership contract. Each party's ownership is determined by the down payment. So for example, we have programs where you can make a down payment of 3.5%, and we will provide the rest of the funds, 96.5% of the funds. So our ownership initially is based on the equity that we have built into the property. Every month when you make your payment, a portion of your payment is purchasing equity from us. In addition, you are paying us a utilization fee for the ownership that we have in the property. Since you will be the one who is living in the property, enjoying the property, you're paying a utilization fee on that portion and buying equity from us on a monthly basis. And the goal obviously being that you become a complete homeowner over the term of the contract. How is that different from an interest-based contract? The first, and from the start, it's a lending and borrowing contract, right? You're signing a lending and borrowing agreement that you are borrowing money from the bank, that yes, there is a property, that is a commodity that's being used. However, you as the borrower are liable for this transaction. And over time, you are paying the bank principal plus interest, right? The interest because it's a lending and borrowing transaction. Now, if there's any losses in any situation, right? Foreclosure, natural disaster, eminent domain, in those scenarios, the bank does not share any losses with you as the homeowner. The bank comes after you personally, your personal assets, any other properties you own, wages and garnishment, any way to collect that money. In fact, if you look it up online, in 2008, 2012, there was a lot of foreclosures that happened in the US after, a once in a lifetime type of situation. Even until 2022, individuals were contacted by banks to recoup losses that they occurred 10 years ago. And there's articles about this online. So the banks, once they have it on their books, if they have written off, okay, that might be a different scenario, but they have the right to come after you to collect those losses even in the future. So why did we choose the musharaka? We talked, there was another slide that we showed, like there's different types of models that are available for Islamic financing. Murabaha, there's no permissible path for securitization. This is a very important aspect in Islamic financing, and I'll talk about why we do this. What the securitization means, essentially for example, we do 100 mortgages, we invest our own money to create these 100 mortgages, and we spent, let's say, $100 million. Now to do the next 100 million, we need more money, right? So what we do is we sell our contracts to Fannie Mae, Freddie Mac, and I'll talk about what we do with them, that allows us to continue doing more mortgages in the future. We're selling them our ownership in the contract. So Murabaha does not allow you to have a securitization. Islamically, you're not allowed to do so. Ijara is a lessee doesn't obtain any ownership until the very end of the agreement. Meaning, in a musharaka contract with guidance, for example, if you agree to a 30-year term or a 15-year term, and you, inshallah, get a big bonus, you want to get done with the mortgage tomorrow, you can do so. No penalty, no additional fees, you have that flexibility. In the Ijara model, you would not have that flexibility because a fixed amount would be set for the term of the mortgage. And so with the musharaka, it's an equitable transaction. It allows flexibility for the individual. It allows securitization because we have ownership, a real milkiyat in the property. Ownership is established from the start, and transfer of ownership occurs in real time. A few other components, capped late payment fee. With traditional banks, any banking methodology, banks will have a method of making money from any late payments. So if you were paying interest on the late payment, they will charge additional interest on that late payment. With us, it's a capped late payment fee. Our Sharia board has fatwa online explaining this. The late fee is capped at $50, which is only to cover the expenses in administrating the late fee. It is not a way of making a profit. Non-recourse commitment. In the event the customer defaults, guidance does not have recourse against the personal assets of the individual. So for example, you're unable to make your payments, the mortgage balance is $500,000, the house sells for $400 in foreclosure. The $100K loss, we will take the loss. We cannot come after your personal assets because we have a limited partnership with you in this property alone. We'll do it at the end if you like. So it ensures that there is some level of risk involved in the transaction with us. And similarly, the risk is shared if the property is lost in the case of a natural disaster or a public service, which is eminent domain public service project initiated by the government to force you out of the property. Again, based on these transactions, we again share loss in the property with you as a homeowner. Very important, like I'm also again mentioned, we are not a bank. We built our company ground up as an Islamic financial institution, unaffiliated with any bank, and approved by independent Sharia board and scholars from around the world. So let's talk a little bit about the Sharia board, who is comprised of them, many of whom actually are serving members of AOFI. AOFI is an accounting and auditing organization for Islamic finance institutions, very well respected around the world. A lot of different governments and institutions contact them for creating or helping them understand the Islamic finance aspects of that organization. So Mufti Taqi Usmani, who's very well known in Islamic finance, is on our Sharia board. He's been with our program since inception. If you visit his website, he has their information on there as well. Alhamdulillah, if you look up his biography, alhamdulillah, he is very well respected in Islamic finance. He's advised governments on Islamic finance, including Pakistan, Malaysia, Saudi Arabia, and recently was at a conference in the UAE promoting Islamic financing. Now keep in mind, Islamic banks in overseas are very differently structured than banking in the US. I'm referring to how lending and borrowing happens with banks here. Islamic banks have some level of risk sharing in Islamic countries, but in any case, this is our Sharia board. Dr. Imran Usmani is also on our Sharia board. In fact, we did a webinar with Mufti Taqi Usmani in November 2020. We have a webinar video available online where he talks about our program from a fiqh perspective, why they have approved our program, how the program is audited every year to ensure that it meets and is transparent with any changes. On our website, we have different fatwas available in English, in Urdu, and in Arabic available to you to review. AMJA, Assembly of Muslim Jurists of America. AMJA is an independent Sharia board in the US, has hundreds of scholars on their Sharia board. And alhamdulillah, they, 2014, if I'm not mistaken, they had a conference to study the Islamic finance modes and companies in the US. So they compared, there's about 5 or 6 other companies in Islamic finance, and they studied each single one of them and gave us the best rating. Every single other company in Islamic finance in the US is owned by an interest-based bank. Non-Muslim owners who are doing Islamic financing, and a bank, a riba-based bank that's doing Islamic financing. So you can understand there's a clash from a business model. Right? A bank's job is to lend money and make money. Islamic financing states the exact opposite, but they saw an opportunity in promoting Islamic financing, and so they launched these programs. Anyways, so if you go to the AMJA's website, they're an independent Sharia board. They've specifically mentioned that Guidance's program is a permissible path for Muslim Americans in need of home financing. The contract was found to be sound in general. Okay, this is their Sharia board's wording. All other institutions, which literally all of them are banks, were declared as companies that the Muslim company is not allowed to deal with or can deal with only in the state of dire need. And who, additionally adding on their website, whoever remains away from them has kept himself safe and has protected his honor, faith and honor. So this is the wording that they provided on their website about all the other companies. Even for our program, and I'll talk about this later on as well, the language, right? They stated that the contract for Guidance was found sound in general. They brought up certain concerns about taxes and insurance, which we'll talk about freely. And alhamdulillah, we have responded to them about our program. Recognition from multiple different websites. You can visit online and you'll see we've received a lot of different awards for our program. A few other details, I don't think which are part of the slides, but very important that I'll share with you guys. Guidance is the #1 sponsor, corporate sponsor of Muslim events across the US. The #1 corporate sponsor, because we're from the community. So ICNA, ISNA, MUNA, MAS, any large organization you'll see will put on the biggest show because we're part of the community. So we invest back into the community. In addition, most recently, and in a lot of many years we've been doing this, we've gone to Harvard to explain our program and explain Islamic financing in the traditional sense and why Islamic financing is the right mode for all of humanity. So we promoted Islamic financing not just in the Muslim community, but at the community at large. We've been to different events at the federal level, explaining our program in depth and how this can be adopted by a large scale and in the large scale in the community, and what the benefits of that will be for all of humanity. So a few myths, and then I'll go into questions, because these are questions that usually come up. So we like to try and be as transparent as possible. And if you need any documentation, we'll be happy to provide, inshallah. So isn't guidance the same as a bank? Number one, banks in the US are prohibited from co-ownership. They cannot own any assets. The only time they can own assets is two main reasons. Number one, to conduct business. So a Bank of America or Chase down the road can own the branch that they are doing business from. Number two, in case of foreclosure, for a certain period of time, they're allowed to own that property. And no other means, they cannot own a bank. A bank cannot own any other property. They're not allowed to have any ownership. They cannot have any risk involved in their transactions. And most importantly, they indulge in the fractional reserve banking method, where they are creating money out of thin air. Founded by Muslims, Guidance was created as a financial services company and not a bank. And we talked about the 18 law firms, 3 years that it took to create this program that meets the federal government's requirements as well as the Sharia compliance aspect of Islamic financing. Very important concept. Guidance creates an LLC on every single transaction. An LLC is created, which means limited liability, LLC, right? Because you have liability in the transaction. That's why you create the LLC, to limit the liability. Now, just like any savvy investor, we do limit our liability in the transaction, but we have liability in case of foreclosure, natural disaster, imminent domain. So it creates a product, the LLC structure, that adds protections for both the guidance and its customers in the event one party becomes partner becomes party to a lawsuit. So God forbid some individual is able to slip and fall, a situation happens at a property, they sue the owners of the property. The LLC separates every single transaction, so one transaction does not impact all the others. It limits that liability as well. Don't you borrow money from Fannie Mae, Freddie Mac? How many of you heard of the word names Fannie Mae, Freddie Mac? Right? So Fannie Mae and Freddie Mac, number one, they're not banks. We're not borrowing money from Fannie Mae and Freddie Mac. They are a government-backed institution that was created by Congress to provide liquidity in the housing finance market. Because without them, there's no money that you have to have real money constantly to be able to fund and be able to provide financing for homes. So their job is to buy mortgages on the secondary market, pool them, and sell them as mortgage-backed securities, right, to investors around the world. So they're not banks. We do not borrow money from Fannie Mae, Freddie Mac. However, we do sell our contracts to Fannie Mae, Freddie Mac, which frees up our financial commitment, allowing us to continue doing more mortgages for additional consumers. That's the goal. That's the liquidity aspect of the transaction. Also keep in mind, even when we sell our contract to Fannie Mae, Freddie Mac, every customer of Guidance still deals with Guidance. Every customer of Guidance still goes on our website to make their payments. You do not have a different lender that you are contacting to make your monthly payments. You still will be having a relationship with Guidance throughout the term of the contract.
So, just a quick question. What is Freddie or Fannie's interest in purchasing Muslim Islamic mortgages?
They create a sukuk, similar to sukuk bonds,
Okay.
and sell them in the secondary market.
So there is actually a demand for such securitized products
Absolutely.
in the U.S.
Not in the US, overseas.
So the overseas investors are investing in these.
Correct. Correct.
Are these mortgage-backed securities also bundled with other conventional mortgage loans, or?
No. Fannie Mae, Freddie Mac keep these separate. Because there's additional risk involved in these products, they keep them in a separate pool for investors from overseas.
The investors won't buy a product which is
Riskier
riskier
than a traditional. They'll say, hey, why should we deal with this? By the way, interesting aspect that this brings up, one of the ways that guidance actually got approval in the initial stages is that we were providing a service for a minority in the US. Right? That is one of the ways that we were able to push and get approval through Fannie Mae, Freddie Mac for them to commoditize our product. Because otherwise they said, hey, why should we take on Guidance's product, which has more risk involved? Why not just deal with Chase or Bank of America, where there's no risk? This is a very important aspect. Why doesn't Guidance share in the property tax and maintenance? This is what I was mentioning earlier, that UMJA, which is an independent Sharia board, one of the pieces they mentioned that is that, hey, Guidance, you are co-owners with the individual in this property. So one of the expenses of the property is property taxes and maintenance. So why isn't Guidance involved in sharing that expense with the homeowner as a co-owner? And we explained that we have to understand what does property tax and maintenance and who does it benefit. So the property taxes in any given locality go towards the schooling, the police, the fire, the roads, etc. And the maintenance goes towards the maintenance of the property, which obviously increases the value of the property. Both of these concepts only benefit one party, the co-owner, not Guidance. The property taxes go towards the benefit for the homeowner who's living there. The maintenance of the property ensures that the value appreciates for the property, and even the appreciation of the value only benefits the homeowner. It does not benefit Guidance at all. Hence, we do not share that in that expense. And doesn't Islamic financing cost more? You know, this is so I joined, like I said, joined Guidance 7 years ago. The company, alhamdulillah, has been growing every year. And as more and more Muslims have been going with Guidance, we're able to compete with traditional banks as far as pricing goes, right? Because the pricing model, and this is a very important concept, and I'm sure it'll come up in our questions, is why is the pricing model similar to a traditional bank, right? And very important to understand in that aspect is the price of a product does not define Islamic finance. If there are two products, each is $1,000, which one is halal? You don't know. It's not the price that determines the Islamic compliance. It's what is the components of that product. What is the essence? What is it built in, right? So that's the important concept to understand. In any case, as far as pricing goes, you're welcome. We're happy to compete as much as possible. In traditional banking sense, there are hundreds and thousands of banks. Every day there's a new bank that's coming up. And so we cannot compete with every single one of them. But today what I can tell you is if you compare us to Bank of America, Wells Fargo, Chase, Quicken, any of the larger banks, we're going to be very competitive. Like at Chase, if I'm not mistaken, we're close to 0.125% or 0.25% within that range. Now obviously, as more and more Muslims go with our product and our portfolio grows, we're able to compete more with these traditional banks. So keep in mind, traditional banks, our target audience, our customer base is the US Muslim population, which is maybe 3% of the US. Banks we're competing with, they have the 97% of the rest of the population, right? So alhamdulillah, we're proud of doing 7 or 8 billion in home financing. Those numbers they do in a month, right? So we're competing against banks that are obviously hundreds folds or bigger than us. But we try to be as competitive as possible.
But can you help answer the question, how do you price your profit margin? How do you internally decide this is the X?
If you don't mind, can we hold on the questions to the end?
Sure.
Okay.
Yeah.
Exactly.
Lastly, I'll talk about current specials. What is the next step in the home buying process, right? So the first step is to get pre-approved. And you would contact us, you have my information, inshallah we can connect, where we will pre-approve you. Now, pre-approval means that you're being vetted financially to find out how much you're approved for, what will be the estimated monthly payment, all the numbers, right? So you'll have an understanding. A pre-approval does not cost you anything. It's a soft credit check. It does not impact your score. So you're able to get a clear idea of your approval and your options by getting pre-approved, number one. And during that pre-approval process, we'll also look at any different grants and down payment assistance programs that are available in the market. Right? Now, keep in mind, down payment assistance programs are income-based, are county-based, and you have to study the Islamic financing aspect of them. I'm here to represent guidance, right? So down payment assistance programs will share the information with you guys, but you have to assess the Islamic compliance of those products. So we'll go through the pre-approval aspect. Once you have been pre-approved to find out how much you're approved for, we'll also help you connect with an agent in the area. Okay? The agent's job is to help you find a home in the price range with the specific requirements that you have for the home. And so he'll show you different properties, walk you through the home buying process, which is to make an offer, getting a home inspection done, and the full closing of your home. Right? So we work closely. A lot of time, 90% of the times, we have Muslim realtors within the community that we partner with to help you find a home. There's a video online. It's just about the Jewish economy, which talks about how once the money enters the Jewish community, if I'm not mistaken, it's like it circles around 8 times before it leaves the community. Meaning, if you have a Muslim buyer, he'll contact a Muslim lawyer. A Jewish buyer, he'll contact a Jewish lawyer, Jewish title company, Jewish real estate agent, Jewish plumber. All of the time, the money will stay within their economy at least 8 times, if I'm not mistaken, before it leaves their community. With the Muslim community right now, it's around 2.3. So it goes to 1 or 2 people, and then it's gone. And then we contact someone non-Muslim. So this is something that we have as Muslims, as a community, we have to work towards, right? That we support our communities. Yes, there are going to be products even within our communities that are not up to par compared to others. And that happens in the Jewish community as well. And the individual talks about it on YouTube. He says that, when we find someone in our community, like a plumber who doesn't do a good job, we still go back to him and tell him, hey, you did not do a good job, fix what you did, but we'll continue doing business with you. So this helps their community continuously grow. And that's what we are trying to also promote by connecting individuals who are looking to buy a house with Muslim agents in the area. Visit our website. We do webinars, seminars about our program on a regular basis. A lot of times we have different scholars that we try to partner with to explain our program from a fiqh perspective. What is the legality of this program? There's different videos available online. At the end of the month, I'm doing a webinar as well to answer any questions about our program in detail. And that's my presentation. Jazakallah khair. I'll let
Thank you so much for explaining the whole process, and I'm sure a lot of you are having questions. I do have this microphone. If you want to ask a question, please use it, because we want to explain the session. And the people who are following us would love to hear your questions. That's something you're going to do, that question, right?
I did. One of my many questions, which hopefully some of which we can discuss later, but one of the main ones was, how do you price your profit margin? Is that related to the current interest rates in the market? So for instance, we obviously keep hearing Powell talk about how the interest rates might change. Would that impact your profit margin? Or your profit margin is fixed regardless of what the interest rate market does?
So in the mortgage industry as a whole, every single company, the model for deciding the product's pricing is based on different aspects, right? The market, 10-year treasury yield, and a lot of different factors that they use to determine the interest rate in the more traditional sense. We use the exact same model, exactly the same. So the pricing model of how we determine the rate for us is exactly the same. So if today the rates are 6.5% and tomorrow they become 3.5%, ours will become 3.5%. So they will change with the market.
But then aren't you, I mean, I'm sorry to say this.
Please, say it.
To the interest rate market. Your profit margin should, in an ideal world, be a fixed profit margin, regardless of what's happening in the interest rate market.
So, and our Sharia board talks about this in detail, right? So the first piece I'll again mention, does the pricing determine Islamic compliance?
If it doesn't, then you shouldn't be referring to that market either.
No, one second. Well, I'll come to that. Let's take it step by step. Does the pricing of a product, how you determine the price of a product, define Islamic compliance? And again, a Sharia board can answer this, right? No. Pricing does not define Islamic compliance. How you determine the price does not impact the Sharia compliance of a product. Now, to stay competitive in the market, you have to look at the market. You cannot say, I'm going to create a model for financing completely ignoring the world, right? Islamic financing cannot just create a new product. It is not a new system. It is meeting the requirements of Islamic financing and those aspects while the whole system that exists, right? So that is the key.
Yeah, and a lot of people who doubt this model is
because of this. Absolutely.
Right?
Agreed.
Because that's what they will say, and I'm not saying it's right or wrong, and let obviously the Islamic scholars decide that. Right?
Exactly.
But at the end of the day, this is one of the major reasons. All you're doing essentially is the same product, and correct me if I'm mistaken, I've worked on Wall Street all my career, okay? I have a banking background, so that's why I know a lot about this stuff. So, all you're doing, if I'm not mistaken, is you're changing the risk-reward relationship in the contract. I think the underlying pricing is
the same.
Is the same.
Correct.
Right, you're determining what you will charge in terms of the profit, the underlying basis of which is the interest rate in the market. Okay.
Yeah, the price is based on the market. Okay.
Profit is based on that.
Correct.
Right? The only difference in an Islamic or halal mortgage is that you're changing the risk-reward relationship by taking a risk that the conventional mortgage
does not.
lender does not take.
Agreed.
That's the difference.
Agreed.
Okay.
Absolutely. So Islamic finance, I'll give you two basic examples, right? Let's say I gave you $100. I lent you $100. And I said, give me back $120. That's a riba-based transaction. 20% return. I say, I'm going to invest $100 in your business. If your business makes money, give me back $120. But if it loses money, give me back $80 or whatever, $70. Right? The second investment transaction is considered Islamically compliant. Because at the end of the day, in both examples that I gave, the amount of money that exchanges hands might be exactly the same. The amount of money that exchanged hands, exactly the same. Except the second investment product has a risk-based shared equity in case of something happens. Which is exactly, you're right. Most people, the challenge Muslim community, when we go to these events or any other, when we speak to individuals is, hey, the bank is giving me 7%, you're giving me 6.5% or 7%. It's the same. What's the difference, right? The requirements are the same. But the most important to understand is that the requirements, the pricing, these concepts do not impact Islamic compliance. I'm sorry, if you allow me, 30 more seconds. This is my opinion, and Sheikh can talk about this. Islam and everything else, there's a very thin line and difference between the two. Almost in anything, right? One piece that can be halal can be just a minor change and it'll be haram, right? We had Eid al-Adha recently. We do Qurbani on the 10th of Dhul Hijjah, 10, 11, 12. Do it on the 9th. What's the difference? It's the same goat, same Allahu Akbar, same everything. But no, you have to do it on the 10th, right? All aspects. Small differences make a difference between halal and haram. And that is the key. Similarly, what I showed you from the Quran, Allah subhanahu wa ta'ala states that they say that commerce is just like interest. But Allah subhanahu wa ta'ala has made commerce lawful and has forbidden interest. That is the key. Sorry, please.
the brother, he said he worked in the Wall Street all the time. Number one, just think, the whole financial system is based on Yahud's control. Now just think, being competitive itself is a challenging. If they are give little more advantage, you don't think all those bankers are going to storm over along with the Congress? And Congress, half of the senators and congressmen are dual citizens of Israeli and American. Now, if you are Pakistani and you are American citizen, they are going to deport you. You have a possibility of deporting. If it's an Israeli, not going to be deported. If you criticize Israel, you are anti-Semitic. If you criticize Islam, nobody is going to say anything. Anybody is going to stand with you? No. See, if you think from even the struggle of the Islamic organization itself is a challenging to survive and sustain. Being competitive itself is not bad at all if you look at it from a realistic standpoint. And then also, another system, even if they are competitive, here the risk is shared. Being a risk shared, whether it's a profit or loss, that itself constitutes Islamic principle because you're sharing the loss and the benefit. Now, that is basically the fundamental principle of being halal. Okay. Now, a few years back, guidance, I was in the meeting, I went to all three massages. I raised the question, let's say the market drops, the value of the house has gone down. Would you share the loss? At that time, I did not get a satisfactory answer. Now what I understand from the brother, if the market drops, you share the loss. Let's say it was $400,000 you had equity on, that's a shared value. Now the market drops and it's become $300,000. They will foot the bill equally with you, and if you want to sell it. Right, brother?
Correct. So I'll elaborate on that.
On the other hand, other bankers, whatever loans you have, you are responsible. Market goes down, you are responsible. If it goes up, of course you will benefit too. They're not going to contest that, okay? Because the loan amount is what you have to guarantee. Now, brother, my question actually is, I'm not supporting your case, or supporting the other case. I'm just trying to, what I understand it. Now I could be totally wrong. Now the board, which is the Sharia board, do they have the stake in financing or the footing the bill altogether, what money is available for lending?
Like, do they benefit?
Yeah, I mean, the Sharia board, let's say 1, 2, 3, 4, 5, 6, 7. 7 people, are they contributing to the money available for lending purpose?
No.
Okay. Now, who are the investors?
Capital guidance.
That means those people.
So I don't have it in the slide specifically, but a conglomerate from the Middle East.
Yeah.
The chairman is Mohammed Hamour. It's on our website. You can visit them. Capital Guidance is the website. They're a conglomerate from the Middle East. A few different families that came across and came together and created this product. Essentially, first they started with sukuks in Asia and in Africa, and then they launched Guidance Residential in the US. So the funding is from a few families from Syria, from UAE, from Qatar, different Middle Eastern families.
Those people who are investors, are they all checked out? Are they themselves Sharia compliant?
Yes.
Themselves?
So again, our claim is simple. Every aspect of Guidance Residential's business is devoid of riba, including the other mentions that I mentioned, like Shaza Hotel brand, Darul Tamliq, the different products that the parent company has across the world. All of their products are consistently void of riba. Obviously, I work for Guidance Residential. I can't talk much about those products specifically, but our claim is, hey, every aspect of our business is devoid of riba based. There are ways to structure products in the investment world that meet Sharia compliance. Unfortunately, a lot of times well, not just we, but like as Muslims, even in different countries, they might not, push for those products. But there are ways to structure products in a profit and loss sharing component or aspect.
Yeah, my question is basically focused on under the guidance and providing money available for that. Is it creating a shield at the same time while they may be doing something else in Saudi Arabia or Middle East, which is totally non-Islamic, but it provides umbrella?
Look, I can only present, what we have, right? Obviously, we have Islamic sukuk bonds in Asia, in Africa. We're providing Islamic financing products through our Sharia board in Pakistan, in Saudi Arabia. Islamic financing is taking a hold in at least the Muslim world, right? Our claim is that there is no product that we do that is riba-based.
No, so I'll defend the position that you have because, for example, I might be calling myself Muslim, but am I doing everything Islamic? No. Same thing with those people, if they're doing something good along the line, it's better than not doing good at all.
I agree.
Is there any check and balance of those people who are investing in that? Just to summarize that.
So I'll mention one thing. Again, I can't talk on keep going deeper, right? So but I'll tell you an aspect of Islamic financing or in general. Very important to always focus on the product, not on distractions of everything else, right? Then you can go into, okay, what about him? Then what about his business? And then what about his uncle? And I guess you're just going to keep going deeper. You have to focus on the transaction, the product, in any aspect. From my understanding, like I said, you can visit the website for Capital Guidance, which is the parent company, which talks about their relationship with different Muslim governments across the world, the different Islamic products that they have launched across the world. Like I mentioned, the first company to launch a Islamic sukuk in Asia and in Africa. They've been at the forefront of Islamic financing in Malaysia. So I would say that I feel comfortable working for Guidance because the company's goal and mission across a span of different businesses is Islamic financing, right? So, listen.
Quick question.
Please.
So the mortgage generally is 20 years, but what happens if Guidance go out of business in between, right? It's a financial institution. Do we continue making payments to Guidance? Or how does that work, right? Because if in case of a bank, we know that they will sell the mortgage to some other entity and we will make payments to them. The second, the part about losing the value, right? How do you limit your losses, right, in the market if there is a 10% correction across the board and everybody is trying to sell their homes at 10% correction levels? How do you minimize your own losses, and are you ready to take those losses as well?
Sure. So the first part was if Guidance goes out of business. So in the US, there's bankruptcy laws, right? Anytime any business goes out of business, the government comes in, steps in, and collects the payments on their behalf, right? So you would still be responsible to make the payments because if any business goes out of business in the US, the bankruptcy law dictate that the individuals or any lending that they've done or any business transactions that they've done, those transactions are still continuing, right? Those still happen. As far as the loss, essentially.
Will we be making payments to who, right? Because to the Freddie Mac, or is it?
Dictated by the federal government, by the courts, right? If you go into bankruptcy or if you close shop, the bankruptcy court will determine how you will collect the payments.
So, if Guidance brought their own money, then and they gave lending, they bought houses, right? And you went out of business, you don't need to collect any money back, unless you are securitization and you have some, based on what you have lent me, you have some obligation somewhere else. Then we need to make it.
Well, we still have equity in the property still, right?
Yeah.
So you as any individual, we still have that equity that's built in the property. So when you still have to make the payments. There's no way to avoid that.
Normally it gets restructured.
It gets restructured by a different company or by the, yeah, it's just, gets passed on.
I'm just thinking.
The key,
So I don't think that matters, right?
No, no, no.
Yeah.
Is it going to be some bank or some interest-based at some point? Yeah. Or is it still going to be like Islamic if you don't handle our mortgages? Right?
I'm not sure. I mean, if the bankruptcy laws dictate how they're going to structure it, right? But at the end of the day, the key component is will the contract remain intact with you and guidance? The agreement that you have, it remains in contact remains the terms of the contract throughout the term, no changes at all, right? So you will not have a situation where you suddenly have a riba-based contract that you have because guidance is out of business. You talked about losses, sorry, just to answer your question about if let's say market tanks. Well, that has happened, right? 2008, 2012, the value of homes in the U.S. across the board went down, right? So in that case, what happened is, at least in that scenario, is the government initially had different programs that they introduced through Fannie Mae, Freddie Mac, actually.
So the guidance, can they have just for the home financing, can they have the masjid financing?
Currently, we only do home financing. Yeah. So again, go 2008, 2012, there were situations where across the country there were values that significantly dropped, right, for properties.
Is there
So
a limitation on me when I can sell, right? Like if the
No.
market is down, can I still sell?
you can.
If I 500,000 mortgage, how?
That's a very good question. So let's talk about those examples real quickly. Like how does the practical look? So the decision regarding the sale of the property is for you, the homeowner. When you want to sell it, how you want to sell it, who do you want to sell it to? So similarly, the profit and loss from the decision you made is on you. So for example, you bought the house for 500 and you decide 3 years later to sell it for 750. The gain and the value from the sale is completely for you. We're not going to share that with you. Similarly, you bought the house for 500 and you decide tomorrow to sell it to your cousin for 475 for a loss. We're not going to share that loss with you because the decision regarding the sale of the property was made by you, the homeowner. We make a profit on the monthly profit rate, which we talked about. We're going to take a loss in cases of foreclosure, natural disaster, eminent domain. Because these are scenarios where you, the homeowner, does not have a say in the sale of the property. So in the foreclosure, let's say, I'll give you two examples. You bought the house for 500, the mortgage was 400. And now in foreclosure, the house sells for even less, 300,000. Right? The mortgage is 400, the house sells for 300. We will take the full 300, but the 100K loss, we will take the loss. We cannot come after your personal assets to collect that 100K loss. Okay, because we have a partnership with you on this property alone.
So when do I decide? So for example, I have $500,000 in the 401k, let's say, but I want to foreclose on my house, right?
You could, theoretically, I'll go to that example. Theoretically, you could have $100,000 sitting in your bank account, but we cannot touch it because we have a partnership with you on this property alone. So tomorrow, if some individual gets a mortgage and decides he's not going to make payments, right, just stops making payments completely, we have, obviously, in case of financial situations, we have programs where we can pause payments for a maximum of 1 year, where you don't have to make a payment, there's no additional fee. But if all the options, for example, have been exhausted, right, and you as a homeowner are still unable to make payments or whatever the case may be, then obviously you go into short sale, then go into foreclosure. House sells in foreclosure, any loss, we will take the loss. Any gains, you will get the gains still in foreclosure.
Yes.
So we have a few, yeah.
So from what you said, the co-ownership, you own the property with, and then there's a declining balance. So each time the property is being purchased by you. So who owns the property and who is purchasing the property?
We both own the property, and you're buying equity from guidance.
From you.
Correct.
Let's say, you're back. Okay. So you own that property and I buy from you?
Correct.
But you don't own because you got the money from Freddie Mac. So you don't own it.
When we do the contract that we have is an ownership contract, co-ownership contract, right?
Okay.
So you own the property along with guidance.
No.
Even when Even when we sell our contract, right, we're selling equity in the contract. Yes, currently, in that case, Fannie Mae, Freddie Mac become investors in this product, and we still stay in the middle, so you will still make your payments to guidance.
Yeah, but thing is, where did you get your money from
Initially,
to buy that property, to go own the property?
capital guidance.
Capital guidance, where does capital guidance get it from?
They're investors, they are Muslim investors.
So you're securitizing the product and giving it out to many investors in the Middle East, right?
Securitizing through Fannie Mae, Freddie Mac, you mean?
Yeah, and giving it out in the Middle East, like you said.
Correct.
So the people who buy the shares, the security, they are the real owners, not you, right? Because they put the money in.
Initially, we put the money in. Initially, we used our own funds.
Initially, you are the owner, then they are the owner.
Correct.
So they become the owners. Why are we transacting with you? Because in Islam, you cannot sell a property which you do not own.
Right. So we own it.
No, you own it, but then you give it off, securitize and give it off to people, some million people in the Middle East.
Right.
So those million people are co-owners with me.
Okay.
So
when you make your payment,
yeah.
you're buying equity from
But
them.
do those people know that they're co-owners with me?
Of course.
They don't. They're just buying shares.
No, of course. They are buying sukuk bonds which have one of the hundreds of mortgages will be one of yours.
Yeah.
Will they know your name?
Yeah, but even then, I mean, they are thinking it's interest payment or whatever is coming back to them.
Why? The contract is structured in a Sharia compliant manner. The key is the contract, right? The contract is a Sharia compliant contract. So similarly, when you invest in any product out there, right? Amazon, any stock that you buy, you're buying an equity ownership in that stock, right? So,
But that I'm doing with my money. If I buy it and then I sell it off to a million people, my share, then those people become the owner of the property, not me.
okay.
So then how do I buy it from you when actually...
We stay in the middle. So you stay in the middle. So we're collecting funds. We stay in the middle. We still stay on the hook as far as the risk sharing component, right?
Yeah,
So
that's the thing. Why do you share the risk? Because in Islam you cannot sell and you cannot call yourself co-owners unless you put your money in, and you should put that money in before the contract is done with the person. Before the co-owner comes in the picture, you should own the property. This is
we do.
rule.
But we do.
Islamic rule.
Yeah, I agree.
Yeah.
And we do.
So would you own the property before even suppose I see the property there, do you own that property before even I contact you?
No.
No, yeah, so then that's haram.
Um,
That's Islam.
No. Brother, let me explain. The day you're buying, yeah, okay.
Brother's question. I think the concept here is that the contract is between you and a legal entity, which is this business.
But that's not Islamic. That's not Islamic.
No, it is.
Which part?
It is not. If the legal entity does not own the property, the Islam is that legal entity must 100% own the property even before it sells it to me.
And this legal
Sells it to
entity
you?
owns this
No, it
property.
does not. If I want to buy a property, let's say right down the street, they don't own it. After I tell them, they own it.
Yes.
No, that's not. They have to own it before I come in picture.
No. So, just before I go to the, brother, when you want to buy a house down the street, 123 Main Street, right? You and guidance together will put your monies together,
I know.
co-own the property, and now both of us have ownership.
The
Agreed?
Islamic rule is you should own that property even before I come in the picture.
No.
Yeah.
I'm telling you,
That is one thing.
you can talk to scholars, I can assure you that is not the case.
Okay, then another thing. You said you will not share in the property tax and the insurance and the maintenance because all of this benefits the owner.
Correct.
How does it only benefit the owner when when it's okay? Because you said that you don't share in the profit and loss if the
Appreciation.
owner decides to sell. You don't know. So
Correct.
how are you then different? Like the brother said before, you have a different risk return structure. They do not, because they do not. Just like a bank which borrows money does not share in the change in the market value of the house. They do not share in the market value of the house. So their risk return pattern is no different than a regular bank.
No. I'll tell you
So
why.
how is it different?
Sure. So again, foreclosure, right? In that,
Foreclosure, those banks also make law. What happened in 2008, 9 subprime loans? People said defaulted. Who lost? Banks lost money too.
you can look up online, and you'll see that those banks actually went after individuals to collect losses.
Yeah, so they went after the 401k, and they went after that. And no, they could not go beyond a certain point. That's why
Unless-
there was financial crisis. Otherwise, there would not have been a financial
No, one second. So the individual, they went after the individual. Let's say the loss on the property was $100,000. They first went after their 401ks. Then they went after their any IRS tax refund money.
Yeah.
Then they went after wages and garnishments.
Yeah.
When all those options were exhausted, the individual either had to call up, file for bankruptcy, or even after 10 years, the banks would come after that individual. There's articles online.
The point here is that legally and contractually, they're entitled to go after your assets. In their contract, what they're saying is legally, they're not even entitled to go after your assets.
Oh.
Under those circumstances.
Oh.
And he has defined those circumstances. But
Correct.
beyond those, of course, we are.
Beyond those,
Yeah, so-
exactly. And the taxes, insurance piece, and maintenance piece, like I said, when you maintain the property, it only increases the appreciation of the value of the property. And who benefits from that appreciation? You, the homeowner.
Yeah, that's exactly like when borrowing from the bank too. Something happens.
Right,
The
agreed.
bank does not share
Agreed.
the loss or the appreciation or the depreciation of the property.
Correct.
Just like we do.
Correct.
It's very similar. I mean, how is it?
Except halal.
But it is good thing, right? You don't want them to be.
I mean, that was the business point.
So if I sell a house for 700,000, I don't want to give them one because other people.
Yeah, I'm sorry, other people. Excuse me, brother. So other brothers have some questions.
question here.
Oh.
Go ahead. I think you can ask one. Thank you. Zeeshan, for the
Yeah.
presentation.
Thank you.
And you get a lot of questions wherever you go. So I had a question about the, like conventional loans will do like an amortization schedule over 30 years where you're only paying like, if you look at the graph, it's like, okay,
Higher
your
interest.
initial payments, you're paying primarily the interest and only a little bit towards the principal amount
Correct.
of the loan. How does that work with?
Exactly the same.
With exactly the same?
Yep. Amortization, again, the way the amortization schedule works, the payment schedule works, the requirements even, right? Credit, income, assets, documentation, timeline. These concepts are going to be exactly the same as a traditional mortgage company because they have been defined, they have been standardized across the industry, in the mortgage industry. There's for every single mortgage company has to follow these standardized aspects. These concepts, again, very important to understand, these concepts do not impact Islamic compliance. Islamic compliance is dependent on the agreement that you're signing, that the contract that we have is a Sharia compliant one, and the risk sharing. Is there risk involved? Does the bank or the mortgage company have skin in the game? Are you taking on risk? And those concepts are met by our contract.
And then the second question I had was around, since conventional mortgages provide the option of refinancing, you say like you guys stay competitive in the market.
Correct.
In the event of, let's say, conventional rates dropping, what is the process of someone who has a co-ownership agreement with you to actually
Anytime.
will capital guidance come in and readjust their profit margins?
You'll have to refinance. Same. So you'll have the same products and features available to you, so you can refinance anytime. Even if you currently have a mortgage with the interest-based bank, you're able to refinance and get into our contract.
Okay.
Those options are available. And so the mortgage rates, similarly in the market, right? If the rates come down from 6.5 to, let's say, 3, you'll be in an advantage to refinance at that time.
And then the third and final question I have is around, do you also have options of providing construction-based co-agreements, or is that only pre-existing homes?
Existing built homes. So let me qualify that a little bit. So new construction homes where the house, we will finance a property when the house is built. Now, in certain cases, obviously, individuals will buy the piece of land, and then they'll hire a contractor and a builder to build on that land. And what happens in that type of transaction is you need money in phases, right? The builder will build the framing, then he'll do the plumbing, then he'll need funding throughout. We do not provide financing for those as of yet. Later on in Q4, we are launching some additional investment products where individuals like yourself will be able to use your funds, invest in our program, will use that money to provide home financing, and will share in the profit with this. What that will do is open up new avenues of products, right? Because the biggest challenge in finance, not just Islamic, any finance, is liquidity. You need more and more money to be able to continuously do mortgages or any new products. For home mortgages in the US with Fannie Mae, Freddie Mac, there's a securitization process, right? So we're able to sell out a contract to Fannie Mae, Freddie Mac, get our money back, continue doing more mortgages. But there's no specific product for car financing, student loan financing, commercial financing. There's limitations there. And so inshallah, as we get more funding through our investors, through Muslim investors in the US, we'll be able to provide those products in the future as well, inshallah. Oh, yeah.
Thank you for your presentation. So I'm not probably as well versed as all this as some of the other people are. Could you walk me through kind of like what happens? Like I buy a house, it's $500,000. For example, let's say I've already paid off $250,000 of that. So in accordance to your co-ownership contract, at that point in time, I would be 50% owner and Guidance Residential
50.
50%.
Correct.
So what happens if there's a major life event, and now, for example, you have to foreclose, and now you have to sell the house,
Right.
So if that house sells, to keep the example easy, it sells exactly for the same price, $500,000. Does Guidance Residential get $250,000 and I get $250,000 at that point in time?
Correct.
Because I'm a 50% owner?
Correct.
Okay.
Yeah. But it's not 50%. So I'll qualify that just to elaborate. So first of all, you mentioned life event. Like I mentioned, for life events, you have to contact customer service, and we have programs where we can pause payments for maximum 1 year, right, due to a life event. They will qualify that, of course. If you're unable to make your payment still, then let's say the mortgage balance was $250,000, and the house sells for, let's say, $700,000. Okay, so just to make it a little bit different. Now, when it sells for $700,000, we will take the $250,000, not 50%.
So
the balance,
okay.
not 50%.
But the appreciated profit goes
To you, the homeowner, right? But similarly, very important to understand. So let's say you bought the house for $500,000, mortgage balance is $250,000, and now in foreclosure it sells for $350,000, for example. We will still take the full $250,000 that's outstanding balance, and you will get the $100,000.
And then one quick kind of similar but follow-up question. In terms of what sort of rates you get on this, does that depend on the amount of down payment you put? Because that decreases
Good question.
the rate. So 3.5% versus someone who puts a 40% down payment or a 30% down payment.
Yeah, so a couple of different factors that go into the profit rate determination. Number one is, part of it is down payment, but pretty much any time you're doing a down payment from 3.5% all the way to 20%, the profit rate is the same. The only difference in that scenario is that if you're doing less than 20% down, there's a fee called PMI, private mortgage insurance, that comes in any mortgage, right? So that will apply, but the rate will be the same. Now, however, above 20%, if you were doing 40%, then yes, the profit will be even 0.25% even lower.
Okay.
Yeah. So
and then maybe this may apply to guidance or not. Like in a conventional mortgage, there's something called like a physician's mortgage, where even with less down, you don't have to do all that other stuff. Does that also work with guidance financial, or is that only for conventional?
Physicians, we do not have that product, not yet. We're working on some products for that, but unfortunately at the moment, no. I think Bank of America and certain banks have that product for future income. No, unfortunately, we do not yet.
Do federal tax credits also apply to you? Like, for
Yes.
example, there's like a first-time homeowner credit or something like that. Does that also apply to guidance residential?
Yes.
Or is that only commercial?
All tax benefits, any credits, any down payment assistance programs, those do apply with us. Yes, those we are approved for.
And if you're paying interest, can you deduct interest on the tax bill?
Yes.
So then you're calling that profit margin as interest.
So exactly the opposite of what you're saying, but yes, I'll explain. So what do Muslims state?
Let me explain.
What do Muslims state, right? Muslims will state, oh, you change the word interest to profit, right? I mean, let's be honest, that's what we hear all the time, right, unfortunately. The Sharia board explained that, hey, the contract that you have signing is a Sharia compliant contract, right? The traditional IRS or the federal government does not have a program where they let you deduct the profit. And so they stated, the Sharia board, that, hey, by not allowing a homeowner to deduct taxes, you are at a disadvantage by going with Sharia compliant Islamic financing options. So they allowed this exception. Please.
So if there's co-owner, then you could call it rent, and then why don't you just call it rent? He said
There's a
Zara,
difference.
so
There's a
Zara,
difference,
that you
yeah.
will get the end of the day.
Yeah.
Rent or the profit, why do you?
Zara is nothing but rent, okay?
No, every month he's also increasing your ownership and paying the rent for the remainder. Instead of calling it profit or interest, let's call it rent.
So brother,
If you call it rent, the challenge from a Sharia compliance perspective is that if it was a tenant and landlord relationship, you will not have ownership.
No, I have the 20% ownership which increases every month.
Islamically, again, this is what scholars have stated, you cannot wear two hats at the same time. You cannot be a tenant and an owner at the same time. You're either a tenant or you're an owner. You cannot be, I am owner, but I'm also renting the other half, but I'm also owner of this part, but renting. So Islamically, they have some questions about that.
brother, okay, so that the concept of profit and interest, okay, it's the same, it's in entire Middle East, okay. All the banks, they replace the word interest with the profit. That's
If there is risk involved,
you have to live with that.
sorry, please.
I would like to thank you for the enlightening speech.
Jazakallah.
I always in favor of in Islamic countries, especially in the United States and other Muslims, the money circulates around the Muslims, not all.
Elsewhere.
Yes, that's very terrible. This is still struggling for it. Yeah.
Yeah.
This is a good effort. Anyhow, so my question is, do we have any numerical calculation example of with the conventional banking and with your system?
I don't have an example. Once we discuss,
The
inshallah, we
reason
can
I'm
do it.
asking-
Sure.
The reason I'm asking, in 2011,
Yes.
I bought a house in Turkey. I'm from Turkey. I went all the banks, searched for their rates, and although I knew the system, what is participation Islamic banking, someone reminded me, go and visit other banking to Islamic bank. I said, okay, that doesn't hurt me.
Yeah.
I also went there. The result, I had to go with the bank, conventional bank. The reason for that, when I get the loan from the bank, I pay, let's say in US dollars, to make it simple, $2,000 a month with conventional banking, with the same amount, with the same condition. If I would have gone with the Islamic banking, I would have paid $3,000 a month.
Mm-hmm.
Almost 1/3 difference.
Mm-hmm.
The reason my question is, you said you are not a bank, you always stress on this.
Correct.
Right? So the bank makes money from money.
Yes.
Then, and you said we are trying to based on values.
Correct.
So if this is the case, so there is nothing wrong with making money. Islamic.
Yes.
Everyone wants to make money, right? If there is an effort, at the end there should be benefit for it.
Yes.
Without benefit, nobody does any job. So, if you are working with the same market condition, why the Islamic banking would be the high value with the lender?
So if you now compare it, I know in the past the delta between traditional banks, interest-based banks versus us was, I would say, 0.5%. We have significantly brought that down. And you're welcome to compare us with a Bank of America, Wells Fargo, Chase,
I'm
Quicken.
trying to see that in number. Because I saw in Turkey it was 1/3 higher participation banking.
It's going to be, so I'll give you recent examples. And obviously, keep in mind, there are different scenarios. Okay, traditional banks, like we were mentioning about physician loans, they have certain programs and products that we just do not have. But if you are comparing apples to apples, that hey, we have a product for an individual, he's qualified with us, and with the same credit score, the individual goes to Bank of America and applies what would be the delta? I would presume right now it will be maximum 0.25%. 0.25%. So you're talking about on $100,000, maybe the difference in the payment is like $15 or $17 a month, max.
The reason is, now historically, we have to preserve individual benefits, right?
Uh-huh.
If the individual is paying more, what is the benefit in this? Second point, I'm not a scholar.
Uh-huh.
Based on my research, very limited. The explanation of riba is not very clear to me. When you call a riba, it does have to carry the condition of the riba.
Which is?
You cannot say simply if it is more than 100, take 120, it becomes riba. Because, for example, when I lend your car for in favor, do you want your car back damaged?
No.
Nobody wants, right? Money is a tool, and the value decreases or changes, right?
Uh-huh.
This is all our universe, all the world. So based on that, for example, when you name something riba, it might not necessarily be riba.
I mean, scholars have defined it.
I know the West Bank is saying their interest is translated as riba.
Okay.
It has to carry the conditions of riba.
Which are?
What is riba? The scholars has to answer. I never find it.
Well, that's what I'm saying. The scholars have answered this, right? They've stated riba.
They say they will give very simple explanation for it. They said it's 100, 120, it's a riba. So I'm just giving you an example from the same word. The money loses value, right? You know, the same thing. So if it loses value, you have to take this into account when you're giving your decision. About
I get what you're saying. I get the example, I think. I'll give you.
I don't have the answer. I'm not saying, I'm not accusing you.
No, I understand, of course. No, please.
So that wasn't clear to me.
I'll tell you what I've heard from scholars about this, right? So let's say lending and borrowing, which just to clarify this example, let's say someone comes and says, I want $10,000. I want to borrow this money. Now he's going to pay you that $10,000 back in 15 years. Now in 15 years, that $10,000 is worth $7,000, right? What scholars have stated is when you're lending and borrowing based on this, you base it on a commodity based on gold. I'm giving you $10,000 based on the value of gold today, which is whatever, X, Y, and Z. And in 17 years, you're going to give me back based on the price of this commodity, right? So there is a specific commodity that is determining the value that you are doing. So it's not in excess. Right? That is the way to structure it in an Islamically compliant manner. Correct, because gold is $1,000, for example, today, and in 14 years it's 1,400. Well, you're going to give me 1 gram of gold. That's it. That's what you're going to give me. 1 gram of gold today is 1,000. Here's $1,000. 1 gram of gold tomorrow is 1,400. You're going to give me 1,400. Right? That's what they would. That's what scholars have stated. Again, I'm not a scholar. I do not pretend to be. I'm sharing with you.
I tried to find the answer. Couldn't find it till today. Very clear. I'm just trying to find it.
Alhamdulillah, you will.
Islamic world, nobody just try to put their mind into this research and try to give the good answer for this. They have effort.
Yes.
That's worth it, but it's not clear cut yet.
Yeah. Unfortunately, with sister. Bismillah. Bismillah. Wa alaikum salam.
Is it working?
Yes.
So, I would like to, I would like to know,
We can hear you. Bismillah.
okay, so I just want to know, at the beginning you mentioned, I came a little bit late, sorry about that, but I wanted to know the type of mortgage you're offering. So you mentioned something about murabaha, ijar.
Musharaka.
A third one. So you are doing ijar.
Musharaka. Partnership.
Musharaka. So
Correct.
Musharaka, so basically, like brothers have said, I bring 250 and you bring 250, right? How do you determine how much would be the monthly payments? Someone else just said that like 1 gram now.
Oh no, this was a different example. Sorry.
Different example, but like,
This the profit rate that you're referring to. We were talking about this earlier as well. Like it's based on the market. So a traditional bank will have a interest rate, and what the way they calculate how much to charge.
I know how traditional bank works. I want to know how you do it.
We will determine based on the individual, based on the market, based on all the factors. We will tell you.
It comes down to what?
Sorry.
It comes down to what when you calculate all of these factors?
A profit. So we will determine a profit rate based on income, credit, assets, and based on the market.
So the profit might be different from me and someone else here?
Between individuals, yes, it could be.
Between different individuals? And
Absolutely.
it's
Because
all
based on how much down payment they brought, how is their credit, how is their income, a lot of different factors, right?
Okay. So at the end...
If they're a
it
first-time
comes-
home buyer, yeah.
It comes to a percentage, right?
Correct.
And that percentage is fixed over, 30 years? Or
So multiple options, 15-year, 20-year, 30-year.
So if it's fixed, then it's a riba.
No. We,
Anything that's fixed, basically, you have to share the risk with me.
absolutely.
If
Thank
you're
you.
not sharing the risk,
Sister,
if you're
we,
not sharing the risk, then it's a riba.
you're right. I agree with you. We share in the risk.
How?
So I went through the presentation, and inshallah, we're going to do webinars later at the end of the month, and I'll share the link with the community as well, which we'll do again. But just to summarize for you, sister, we make a profit, but we also share risk in the transaction. If you're unable to make your payments due to foreclosure, natural disaster, even a domain,
It's very minimal risk.
correct? There is risk. Do we minimize our risk? So that's a very good point. It's minimal risk.
So that's basically playing with the you're at the edge. Like you are trying to be, presented as Islamic,
Uh-huh.
Islamically okay, but it's not really, you're not sharing all the risks.
What other risk would you like us to share?
If I'm doing stocks, I put my money, if I lose it, I lose it.
Right.
Right?
So what other, again, the point is, what other risk can we share in the transaction with you? What would you say?
For instance, okay, when you mentioned like it's a value, the profit you calculate based on a profit of the value of a commodity, right? Is that what you mentioned?
No, I'm sorry.
No.
The example I was using was completely a different question. It wasn't related to our...
So like how do you calculate like the profit? I just want to understand how you calculate it.
Same as the market rate. Exactly the same. How... Let me ask you a question, and we'll move on from this, because we covered this.
How would you know what the market value would be?
No. Sister, I will discuss, inshallah. I'll stop by, I'll sit down with you, I'll go over it, inshallah. We went over some of these questions, so I want to make sure that I answer everyone's questions, if you don't mind. We talked about, we use the market rate. The question, and always very important to understand, is does the price define Islamic finance? Think about that before we sit together.
Sorry for interruption, brothers and sisters. Please feel free to grab some slices of pizza here, because
Yes.
it looks like this discussion is going to take.
Bismillah. Please.
So we're going to continue this, but please feel free to grab some slices of pizza.
Yeah, brother, every piece you pick it up, every piece you pick it up, just drop $5.
Connect with agents. How do you do that?
So once we pre-approve an individual, we check your credit, check your income, assets. Does not impact your score. There's no fee.
I'm going out for my real estate license, which I'll have had by the end of the summer. So
Contact.
How would I connect myself?
Get my card. Connect with me. So what we do is we add you into our network. All right. And then anytime we find a buyer in the area who's looking to purchase a home, then we connect them with a Muslim agent in the area.
So I just send my information to you.
Correct. You'll be part of our. There's a process. You have to register, etc., as a realtor. And then once you're part of our network, then you'll be. But once we have a buyer in the area, for example, in Wexford, someone says I want to buy a house in this price range, we'll contact you, let you know that hey, we have a buyer. Here's our requirements. Are you available and able to assist this individual?
And vice versa, like if I had a client and they're looking into Islamic finance,
Correct. Exactly. And that's how we build a network with Muslims around the country. Alhamdulillah.
As I'm speaking to you, I'm actually submitting an application.
Oh, you are? Alhamdulillah. Alhamdulillah. So, very important, very good questions you asked. You know, because...
So you said musharaka, just let me understand. What are the three different ones? Murabaha?
Murabaha, musharaka, and ijara.
Okay. So, let's just focus on what you